We're joined in the studio by Sullenger. He's managing director at Gaia Capital Advisors. Great to have you in our London bureau. Thanks for coming in. So your entire investment strategy is based around structural changes in the farming industry and how they are going to feed this ever-growing population.
Absolutely. It's a huge challenge because by the year 2030, the FAO projects that we need to produce actually 50% more food to meet demand, and by the year 2050, as much as 80% more food. So this is a huge challenge. And actually, this is one of the reasons that we've just launched our Gaia Farming Index to capture just this month. Yeah.
And how is that going?
Well, I think it's a needed initiative. I mean, it's, there was no index that gathered together all of these global farming companies, which are actually investable, and investors, I don't think, really realize that.
Why do you think they haven't been invested in the past? You say investors don't realize that. What's changed?
Well, I think the problem has been liquidity and the recognition that farming has changed over the years. Farming has become commercial. Farming, I mean, talking about agriculture, we think about chemicals, we think about, companies like Monsanto, Syngenta, equipment, John Deere. But farming itself is actually practically 25% of the economic value chain, but it's less than 3% of the capitalization. So it's completely undercapitalized. And I think today there are large-scale farms which are investable in places like Brazil or Russia or Ukraine, and our index brings all that together, in one index.
But isn't it slightly risky to be involved with companies at the forefront, the front lines of farming? I mean, things like weather. I can imagine most investors have thought previously, stay away from that.
Yeah. No, that's a good point. I mean, farming is a risky business, but I think what's so interesting about the large-scale farms is they're able to mitigate that through having the size. I mean, we're not talking about, globally, the average farm is about 2 or 3 hectares, the average size of a farm. That these large-scale industrial farms are as much as 50, 200, 300,000 hectares. So we're talking about large-scale diversified companies with vertical integration. They have the wherewithal to diversify crops, to diversify regions, to have crop insurance, to have the latest technology. So all of that, it helps to manage that risk. I mean, the weather risk is enormous. That's the biggest risk in this industry.
I'm not so sure investors agree with you. I know it's early days yet, but we can see the index that you've just launched is down.
It is. Actually, it's depending on which period you take. But the problem is that despite that this index brings you exposure to agricultural land, which I think is very attractive, and investors realize that because next to gold in the last 10 years, agricultural land, farmland, has been one of the best performing asset classes.
And the companies in your index are landowners.
Well, they own and operate huge amounts of farmland.
Tell us about the new farmer. Describe the new farmer, the corporate farmer.
Yeah, well, this is a new breed. The corporate farmer is an executive. I mean, he dresses in a suit like myself.
A former commodities trader, perhaps like yourself as well.
Oh, maybe.
But
the farming business is all about logistics. I mean, it's agronomics, but it's really a logistics business, and it's a really tough business. But the corporate farmer, might be presiding over 100,000 hectares in Brazil. So, he's in the field, he straps on his boots. I mean, it's a tough business. You've got to get up early. But, he's an executive, and this is the big difference. And I'm not saying that, commercial farming is the only way to go, but it's definitely one of the solutions to the food challenge that we have is these corporate farms, which are much more efficient.
When it comes to soft commodities, what is the outlook? Which are expected to rise by the most in 2012?
Well, you mentioned, soft commodities did come off a little bit. We had a nice harvest in the northern hemisphere, but despite, a strong harvest, we're still facing this chronically low stocks-to-use ratio. So that's the inventory levels expressed in days or percentage of global consumption. So that just shows that the market's tight. It's going to continue to be tight. I mean, I'm not Malthusian, but it's going to take a hell of a lot of new production and new investment and a green revolution to be able to have real food security. And that's part of the reason that this index, we think, is a step in that direction.
Sullenger, Managing Director at Gaia Capital Advisors, thank you so much for your time.